John, how are you? Happy day, happy day.
Happy day, happy week, happy month, year, happy life. How are you doing, my friend? I love our conversation as I know that our audience are loving them too. I've got such an amazing feedback. Our past videos, especially the one that you shared about how to protect our legacy, that was gold. And I hope that everybody always walks from here with something actionable so they can improve themselves, but not in their personal aspect, but in their business life. How are you doing, my friend?
Fantastic, fantastic. Great to be here with you. And in fact, one of the conversations that we had recently was along the lines of, hey, this is time of the year that a lot of us are revising our forecast for the year. You know, where we crossed the halfway point, the midway point for the year, and there's a lot of things that have happened that we were not forecasting. You know, the cost of goods, the cost of services, inflation pressures, a whole host of things that have a direct impact not only on the top line but also on the bottom line. So we talked about how now was the time to revise our numbers upwards for to make sure that we hit our targets for this year. So along those lines, I started thinking, I wonder how many of our audience, of our fellow entrepreneurs, fellow business owners that connect with us on a regular basis. I wonder how many of them understand that all of us should be looking at three types of income coming into our business. And I'm not talking about multiple flows of income. That's a different subject for a different time. I'm talking about three types of income, of revenue that we all should be looking at. Can you want to guess what those three things are? Those three types?
You know what? I'm not going to pretend here that I know things, so you have to educate me when it comes to this. So I'm all ears.
Well, let's do this. Maybe this
Yes.
will help me flush out the idea and it will help you pick up something new.
Yeah, yeah.
So here are the three types. The first type of income that we should be looking at is what's called linear income. That's when you do something, you do an activity, and you get paid for that activity. What happens in the W-2 world, in the employee-employer relationship, is that you work 8 hours and you get paid for those 8 hours. When you don't
Okay.
work, you don't get paid. That's why it's linear. You do something and you get compensated for that something. When we go from we a lot of times when we transition from the W-2 world, from the employee world, and we transition into the small business owner entrepreneur world, that's all we bring to the table. That's all. That's our. We bring that thinking with us, is what I'm trying to say, because that's the only thing that we have been trained from since we were kids. You work and you get paid. You don't work, you don't get paid. And we only look at linear income, and that could be in I provide a product, I provide a service in the marketplace, and I get paid for that. I provide consulting services for a client, and it may be a 1 month thing, it could be a 1 day thing, it could be a multiple month transaction. But once that's done, it's done. And so the work begins and ends, and the money also begins and ends. You look at real estate, you look at that business that so many of our friends are involved in is linear income. If you're the real estate agent, you list the property, you sell the property, you collect a commission for your work, deserved, for the work that you've done that is highly desirable and useful and provides real value. And then as soon as that transaction closes, you're out of a job. Okay, so the money ends. So that's linear. You do something and you get paid for it. And the second type of income, does that make sense? The linear piece? Most of us are familiar with that. You're
Oh,
good with
yeah,
that,
it
right?
totally makes sense. I mean, and the beauty that I would like for you to educate us too, it's like some people, believe it or not, when you speak in the languages of like W-2, 1945, they don't understand what are those. Can you bring a little bit of clarity of the difference between one and another, please?
Sure. W-2, what I refer to W-2 is a tax form. And
Correct.
and
There you
and
go.
what it does is use that terminology is used when someone works for somebody else.
Yes.
When I worked at General Electric for many years, I was a W-2 employee. I was on salary, to General Electric. So as long as I had an employment agreement with them, they pay me a salary for that. That's what W-2 is.
Correct.
When you transition to entrepreneurship, you transition to a small business ownership, you make your own money. So there's no W-2 form unless you create a corporation and you become an employee of that corporation. That's not most of us, okay? And it also, when you are a realtor, or when you're what is called an independent contractor,
Or a consultant, for instance.
a consultant,
Okay.
it could be a real estate agent, it could be an insurance agent, it could be an accountant working in an private accounting firm that you get paid. Basically, you eat what you hunt, right?
Yeah.
Or you eat what you kill. That means that when you do something, you get paid for that. But since there's no employer-employee relationship, you're not that income is not reflected in a W-2 form. It's reflected on a 1099 form, which is used to pay independent contractors. So that's really the differentiator between W-2 and 1099 or independent contractor agreement. Most realtors are paid that way through a 1099 arrangement. Most insurance agents are paid that way, and many others. So I'm not a CPA, I'm not an accountant. So if you still have questions about that, I mean, not you, Joanna, we can talk offline. But others,
Of course.
they
It's
can
just for
talk
our
to you.
audience, for them to have that difference very clear. And Crystal, because you have no idea how many people do not see this or haven't been able to be explained in such a crystal way, like you always do, explain things.
Appreciate
So
that.
okay, that's the first
Yeah.
the first type.
So
What's
linear.
the second one?
That's right. We talked about linear, right? You do something, you
Correct.
get paid for that something. Yep. You work an hour, you get paid for the hour. You sell a house, you get paid for the house, that commission on the house. So the second type is called leveraged. Leveraged. That's when you have leverage income. And what does leverage means? That's a relationship keeping with the real estate world, because a lot of us are familiar with the real estate world, is the relationship between an agent and a broker of that agency. So as a real estate agent, you sell a property, you get paid a commission on that transaction. As a broker, you build a team of agents. That's why you become a broker, so you can leverage time, leverage income. And not only do you get paid for any transactions that you make personally as a broker, but also you get paid a piece of all your agents' transactions. So you're leveraging your team's production to increase your income. So that's the second way that we should be looking at in our businesses. We should be looking at not only having linear income, but also having leverage income. One thing that I learned along the way is, and this is not something that came out of the sky and landed on my lap, but really good friends of mine who have been very, very successful. They told me, I like when people just speak to me clearly. And they said, look, if you have a business and everything depends on you, that's not a business. That's a job. A job that you created, a job that you probably love, but it's not a business. It's a job that you're self-employed. You're not an entrepreneur. You're not a business owner. And what that person went on to explain is that is the difference between linear and leverage income. Basically, he said, if everything you generate is linear income, you have a job. It's a job that you created for yourself. You're self-employed. When you transition to leverage income, meaning that you build a team and you have a way to increase production and everyone gets paid and you get paid on everybody's production, that starts to become a business. Think about a chef. A chef, it could be a fantastic, talented chef that makes the best food, but he or she does not have a team to help him or her grow a business, i.e. a restaurant. They're just a chef, and that's really not a business. And I shouldn't say just a chef. I'm just saying that all they have is what they can produce personally. You know, in a restaurant environment, when the chef is the owner, he or she's leveraging people on the kitchen to prep, sous chefs, chef de cuisine, all that stuff. Then you got front of the house people to help them take care of the clients while they're there, run the dining room, and others. And that's called leverage. That's why a restaurant can do $2-3 million a year.
Correct.
And it doesn't all just rest on the chef's efforts. So that's leverage income. Think of a chef in a restaurant. Think of a real estate agents versus real estate brokers. So that's the second thing. Does that make sense? Leverage, you're leveraging people's resources
Oh
and,
yeah.
and everybody gets paid. Okay, fantastic. And by the way, in corporate America, before I get off of that, we are all being leveraged, right? As an employee, the organization, the corporation is leveraging all the employees to produce products and services for the marketplace, right? And within teams, the general manager is leveraging their inside salespeople, the outside sales reps, the engineering team, the supply chain people, is leveraging everyone's effort so we can collectively do more. Okay? So that's the second thing. The third type of income is what is called residual income. And that's when you do something one time and you get paid multiple times for that one thing that you did. And so in some cases, you get paid for a very long time, or in some cases, forever for one activity that you did.
I love that one.
Well, that's the holy grail, and
Yes.
most people do not understand and have never really heard or understood what residual income means. I kind of I knew the technical side of it, before while I was still an employee, a corporate employee, but I didn't really live what residual income is until I went into financial services many, many, many years ago, and I lived through that experience. And I go back to that. But again, residual income, you do something one time, you get paid multiple times for a very long period of time, in some cases forever. In the entertainment industry, that's called royalties. Somebody produces a song or creates content, and I own that content, that song. And every time somebody wants to use that song, because it's my intellectual property, I get paid a royalty for that. I don't have to sing the song again. It's produced one time. And every time it gets used, it gets paid. So that's an example. And publishing is also royalties, right? The author writes the book one time. If I want to read the book, I buy the book, right? That there's a piece goes to the publisher, a piece goes to the author. If you want to read the book, the author doesn't need to write the book again. It's already written. So every time somebody buys it, they get paid. And so that's in the publishing world. That's what that's called. I learned this. I lived this concept in the insurance and financial services industry. In fact, I learned linear income because I started by myself. So I knew what it was like. I need to sell a bunch of policies, a bunch of premium, and I get paid a commission on that. Fantastic. Now, leverage is when I build a team and I expanded and I had offices in 6 different states at some point. So everyone's production, all my agents got paid, and then I got paid a little bit on everyone's production. Now, the residual piece in that world is called renewals. So to keep it really simple, auto insurance. You may buy a 6-month policy or a 12-month policy, depending on the company. I sell Joanna a 6-month policy, and it's $1,000. I get paid a commission on that $1,000. On just before your policy expires, it renews automatically. You pay me again, or pay the insurance company again. This time it's probably going to be $1,200 because insurance rates keep going up. And I get paid a commission on that again, and I never even have to talk to you. So, and that could go on for years. As long as you keep your policy active, I keep getting paid as your agent. So that's what I learned about residual income, that I could look at my bank statement and look at deposits being made and not know where they came from, honestly, because I wasn't involved. And
I
that's
love
really,
me some that. That's beautiful.
I love me some of that too. And I think if more people understood what residual income really was, there's a saying, if you know what it is, if you really understand it, you run through a brick wall to go get it, because it's that powerful and that significant. So again, every business has the possibility and the opportunity, if it's planned correctly, to generate those 3 types. It's up to you to create the inventory, to create the inventory of products or services that will allow you to do that. And having gone through this experience myself multiple times of what it's like to have it three ways, right? Cake and
Yeah.
ice cream and coffee, three ways.
Yeah.
Um, I will not do anything that doesn't provide three types of income. And that's one of the things when somebody
And
presents,
it makes sense.
yeah, somebody presents an opportunity to me, I'm not looking at it unless it's got possibility for those three types of income. And again, everyone should be able to create a path to having that in their business. They can create it in house,
Hmm.
or or they can bolt on something to their business that helps them get leverage, that helps them get residual. The linear part, the direct part is easy because that's what we're used to doing, and most of us are ready to work and ready to earn our money. But if you don't create leverage, if you don't create residual, we're gonna be working for the rest of our lives until you die. Honestly, and that sounds awful, but that's the reality. Because when you're not working, you're not earning, and that's the risk of linear.
Correct, Antonio. And I believe that the pandemic, aside from making the huge comeback for QR codes, also made us aware that just having one avenue when it comes to your income is shooting yourself in the foot, because that one can always be taken away. So it's important to diversify and find different ways to create income in this in three ways that you were just showing us, which is
Yeah,
very, very, very important. And this is something that came from experience. I was able to, to see, unfortunately, many friends and family that were like, you know what, I got laid off. The company no longer can keep me during this. And okay, what's your plan B? I have enough savings to, fly by for 6 months. Others had nothing because they never thought that this was going to happen.
right.
So for you to show us and explain to us, okay, it doesn't have to be one way. You actually have three options. It's beautiful.
Three options, and they're all viable, and they're available to
Correct.
everyone if
Correct.
you're intentional about it. And I think I shared this story with you before. One of the reasons, or the main reason, that I became an entrepreneur back in 2004 is that I was laid off. I was laid off for corporate America not once but twice inside
Damn.
of 5 years. So
Sorry, but
no,
I
I
don't
mean,
want to
but
even imagine.
people get moved. You move because of something ahead of you is really good, or because something behind you is really scary. So in my case, I got pushed into motion, right? So so I know how real that is. I know how real it is to have one thing and depend on one thing, and that thing go away.
Yeah.
Okay, so that's not necessarily what we're talking about today, but it's very related to the topic. Multiple streams of income is one thing. Three types of income on your current thing, that's something else, right? They're related, but they're not the same. So a quick example of perhaps some of our friends could relate. So a consultant. I'm a business solutions consultant, right? You're a marketing strategist and a branding consultant strategist. So we're very focused on what we do. Fantastic. So our linear income is based on the products and services that we provide in the marketplace. And that's the linear piece of it. Unless we have a team around us doing what we do also, and we're able to leverage that production and get a piece of it, we don't have leverage. So our first step was, how do we build leverage in our business so we can do more, serve more, and make more, honestly. So that's the second thing. The third thing is, those consulting gigs, they start and they end. They're very transactional. They're not usually not for a very long period of time. So they start and they end. So how do you make sure that you create something that has a longer life cycle, that
Yeah.
lasts for a lot longer, and it pays you for a lot longer while you're doing other things? Now, that doesn't require your direct input to make that happen.
Correct.
So one way that some people do it in our space is they create courses, right? They say, okay, they create subscriptions. Say, okay, now I'm the expert on this, and I provide this services one on one, and I get paid for that very well. Now I have a small team of people who do similar things that what I do, and I become not only a consultant, but I have an agency or a firm, and they get paid the gross of what they do for the production that they do, and I get a little piece for providing overhead and and client lists and things like that, and branding and things like that. The residual is, let's build a curriculum, a coaching system that our clients can benefit from on an ongoing basis, on demand, 24/7. It doesn't require our intervention all the time, but they pay, I don't know, $50 a month, $100 a month, $200, whatever it is, and it's a subscription plan that pays. That's residual. You
Yeah.
know, that can turn into residual because you do it one time. You sell that thing one time and you keep adding value through that channel and it will pay off. It doesn't require more of your input.
Correct.
So that's a simple example of things that I've seen in the marketplace. Does that make sense, Joanna?
Oh, by all means, by all means. Yes, it totally resonates. And I guess that the question that our followers are asking, like, where do I sign up?
I will tell you that there's a way to evaluate opportunities to do that. And that's a different topic for a different time. But I actually have a way that there's 5 things that you need to look at on any type of business, any type of project before you make a decision. So we can talk about that at a different time. But for now, I think the message is, listen, this time of year, you're usually looking at your forecast, your sales forecast, and how far are you from where you need to be at this time to make sure that you have the year that you forecast. So while you're doing that and looking at your financials, you should be looking at how else do I have leverage in my business? Am I really a business owner or am I a self-employed person? That's the first
Correct.
question. And if you're a self-employed person and you're okay being that, cool, understand the risk and keep doing what you're doing. Now, if you're saying, I'm a self-employed person, I never looked at it that way, I raised my level of awareness, I want to build leverage in my business. Okay, so think about how you can add leverage to your business. There's really 2 main ways, people and technology. And I will tell you that people is the way that you buy time, is the way that you become bigger faster with people. So that's the second thing. How do you build leverage? And the third thing is, how do you build residual? How do you make sure, how can what you do today, can that generate residual income? If the answer is yes, do more of it. If the answer is no, start looking for ways that you can bring something to your business, to your platform, that will generate residual income. The holy grail is residual income. It's really, things that you do one time and you get paid for a very, very long time. So that's really, I want to raise the level of awareness that this exists. And then maybe that will lead us to different conversations based on the comments that our friends, include below this live stream.
Yes, yes, yes. And Antonio, as always, these are pearls of wisdom because it's so often that people or business owners call themselves a business owner, but it's a team of one.
Yeah.
And the first step to work on a problem, it's to acknowledge that you have a problem. Hey, if you're okay with being a solopreneur, that's fine, but be aware that it's not gonna be sustainable in the long run because, like you just said, if you don't hunt what you eat, you don't eat. Period. So if that's the way that you're gonna make it happen and that's gonna work for you, perfect. But also take in consideration that if you want to be on your own, you also need to create another type of leverage where you can create, like you just mentioned, the courses, workshops, whatever you name it, that it's gonna be out there for a long time, and you're gonna keep earning from that.
Right.
Single effort, which oftentimes we do not realize, and that's very, very important for everyone to be cognizant and aware in order to make yourself and think for the future.
Yeah, 100%. And that's what we're trying to do. Just raise the level of awareness. And you know, I have friends that do everything on their own, and they're one person band, and they make $500,000-600,000 a year, and they're perfectly happy with that. And I'm not saying that that's bad money. I'm saying that's great money, and it can be done, and it has been done. It's being done. You see a lot of this on the digital space, right? You know, people
Correct.
doing e-commerce or doing Amazon drop shipping. They're doing trading, forex trading. There's a lot of things that are one man band, right? One person band,
Yes, 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 yes.
and that's okay. I'm not saying that that's bad. I'm not poo pooing on any of those ideas.
Oh, no,
I
no, at
will,
all, at
I,
all.
I will share with you and everyone who will listen that, like a great mentor told me, he says, "Look, man, one of anything is too close to zero. So as good as it may be, it's still too close to zero. It can go to zero like that, and then what? So that's what the conversation about, you know, having multiple types of income, you know, linear, leverage, residual, and multiple streams of income. You know, what you're doing, your main thing, and then your side thing. That's two.
Yeah.
Another side thing. That's three. So that's three streams. So if one dries up, the other two are still feeding your family.
Right. The power of three, you know me, I'm always all about that.
Yeah, absolutely. So anyway,
Yeah.
that's. I hope this is valuable. I hope that, you know,
Oh,
it's
yeah.
clear as to what the three types of income are. Raise the level of awareness. Make sure that you look at this as a business owner, as an entrepreneur, as a entrepreneur, someone who's looking into uh, doing something, an entrepreneurial project. I
Correct.
encourage you to look at this right now, to look at it ahead of time and
Yeah.
understand, you know, what are the pros and cons of one single type of income. And, you know, down the line, if this makes sense, it doesn't make sense, you have a question, include it down below in the comments. I'll be happy to address them. And maybe there's some things that we can do a little bit better and go do a deeper dive into one of these in this topic or others related. So I encourage all of our friends to include their comments or questions below.
Thank you. Thank you, Antonio. Thank you so much for sharing that and give us a little bit more clarity in this entrepreneurial journey, the journey of life, pretty much. Because even if you're an entrepreneur or you're working for a company or you are thinking or considering having a side hustle, these are the things that need to be taken care of and you need to be aware of. And once again, thank you so much for sharing with us.
First, great to see you, Joanna. Thank you for your
Likewise.
time. Thank you for your friendship, and we'll talk soon.
Yes, by all means.